Hello and welcome to KPMG's 10 Minutes on Legal, where we discuss some topical legal matters in 10 minutes. My name is Michael Moore and I'm a Principal in KPMG Legal Services. Today I'm talking to Andrea Sherlock, a Director in our company secretarial team, about recent developments in the area of beneficial ownership and accounts disclosure. Recent developments have meant that beneficial ownership registration obligations have become more onerous, and there is an onus on companies to be able to quickly and clearly demonstrate compliance in order to do business. Hi Andrea, beneficial ownership has been in the news again recently. What's happening?
Well, Michael, the recent Russian invasion of the Ukraine has brought transparency and money laundering into the news again. I suppose particularly in the UK, there has been a lot of fresh media attention that shell companies should not be used to hide money from corrupt Russian oligarchs. In Ireland, there has also been a lot of recent media coverage in relation to Irish organised crime gangs. This focus is likely to bring attention to Ireland's beneficial ownership disclosure regulations. We should remember disclosure of beneficial ownership for companies was first proposed almost 10 years ago in 2013 at the G8 summit by the then UK Prime Minister David Cameron. He was highlighting back then the urgent need to stop companies being used to hide the proceeds of crime. A series of anti-money laundering directives all flowed from his proposals. And in Ireland, we responded to the directives by introducing obligations for Irish companies to file beneficial ownership details on a public register in 2019.
And have all companies filed?
In a recent statement, the Registrar of Beneficial Ownership for Corporates announced that approximately 88% of all companies had filed on the Central Register, but about 30,000 companies have yet to file.
That's a lot of companies that haven't filed. What are the consequences for non-compliance?
These companies who haven't filed could be liable for penalties as high as €500,000 if prosecuted, but we have seen no companies prosecuted yet. Although we know during the pandemic the enforcement measures were put on hold. In recent weeks, though, warning notices were issued by the registrar to errant companies, giving them strict deadlines to comply.
Those potential fines are very significant. What are you seeing in practice?
To be honest, we're seeing a lot of interaction with corporates and their banks. Under the regulations, banks, as designated persons, are obliged to check that beneficial ownership details have been filed in the Central Register prior to allowing a new account to become operational. This can cause delays in getting bank accounts open, which can be very frustrating for clients who 9 times out of 10 want a bank account opened in a hurry. It's also important to note that should the bank form an opinion that there is a discrepancy between the beneficial ownership information shown on the Central Register and that provided to them, that they are legally obliged to report the discrepancy to the registrar. The registrar has also advised recently that the number of discrepancy notices being filed by banks is on the rise, and we have also seen a few live cases where clients have contacted us stating that a discrepancy notice has been reported against them. This generally happens in group situations where the bank are being provided with group charts and sometimes the information doesn't exactly match with the information disclosed for beneficial ownership on the Central Register, being the natural person owning more than 25% of the shares, votes or can control the company via other means.
So it's important then that companies have completed their filings and have done so correctly. If companies haven't done so, could this potentially delay transactions involving banks?
Exactly, and I should also highlight that legislation has been reduced for all types of structures. It's not just companies that are in scope. Similar types of rules apply for ICAVs, common contractual funds, investment limited partnerships and most recently express trusts, all having obligations to disclose their beneficial ownership details.
Okay, so that's the position here in Ireland. What are we seeing in other countries?
Well, our closest neighbours, the UK, were ahead of the EU in bringing in public registers. As I mentioned, this whole process started with David Cameron. Nearly 10 years on from his initial proposals, Boris Johnson has gone on record saying those backing Putin should be on notice there will be nowhere in the UK to hide ill-gotten gains and dirty money. And he has taken action to try and stop the flow of Russian cash into London. A new act has been fast-tracked through Parliament in a record 2 weeks process. This new act, the Economic Crime Transparency and Enforcement Act, received royal assent on the 15th of March. It is specifically aimed at preventing foreign owners from laundering money in British property and to try and identify corrupt Russian oligarchs. Part 1 of the Act deals with the set-up of a beneficial ownership register of overseas entities, which will be maintained by the Registrar of Companies at Companies House, requiring overseas entities which have acquired land to register and disclose their beneficial owners.
And are the thresholds that apply to these overseas entities, are they the same as the thresholds that apply here in Ireland?
Yes, the threshold percentage is more than 25%, like the rules here. A beneficial owner for the purpose of these regulations seems to mirror the definition of a person of significant control under the PSC regime in the UK.
That's helpful that the thresholds are the same here as in the UK. And for Irish companies that own property in the UK, are they required to comply with this new regulation?
Certainly. The Act is set to capture any entity that is holding land in the UK but is governed by a law anywhere outside of the UK. Therefore, any Irish entity or body corporate that is the registered holder of land in the UK will be in scope.
And will the public have access to this new register?
Yes, the register will be maintained by Companies House in the UK, and like the UK PSC register, the public will have access, although some personal details like full date of birth and full address will be withheld.
So there's some pretty clear obligations for Irish companies that own properties in the UK. What are the consequences of non-compliance?
Once the Act is commenced, and that is likely to be imminent, companies will need to register and file beneficial ownership details within a 6-month transition period. There could be daily fines of up to €2,500 if prosecuted for non-compliance.
Very interesting. So there's a potential for significant fines for people that don't comply. Andrea, how would you sum up the obligations and the requirements for Irish companies in the beneficial ownership space?
Firstly, I suppose for Irish companies who have not filed yet on the Central Register, I would urge them to act. Given recent media attention to this issue, the Registrar may start a sample process of companies for prosecution. Similarly, trustees of express trusts, ICAVs, common contractual funds and investment limited partnerships should all review their disclosure of beneficial ownership requirements. Remembering, compliance is not a once-off obligation. Any changes in beneficial ownership or details to the beneficial owner need to be updated to ensure disclosure is in line with the EU directive being adequate, accurate and current. Finally, clients that own any land in the UK need to check if they fall in scope of these new UK regulations. And they need to confirm if the land is registered in an entity outside of the UK. Michael, I understand there has been some recent changes in the accounts filing rules for Irish companies. Is this further evidence of changes in legislation to ensure more transparency for Irish companies?
That's right, Andrea. The rules in relation to the accounts filing obligations of Irish incorporated unlimited liability companies have recently been updated. While the rules in their application are quite involved, in essence, since 2017, all Irish incorporated unlimited liability companies have been required to publicly file their annual financial statements with the Irish Companies Registration Office, where a limited liability undertaking acts as its holding company. This existing 2017 rule, in effect, looked up an unlimited company's corporate group structure to see if there were any limited liability entities above it. For accounting periods starting on or after the 1st of January 2022, an additional rule has now been introduced. In future, an Irish incorporated unlimited liability company will also be required to file if it has a limited liability subsidiary. This new 2022 rule in effect means Irish unlimited companies will now also be required to look down their corporate group structure to see if there are any limited liability entities below it. These limited liability entities could be subsidiaries located in Ireland or indeed in any other country in the world.
So this could mean that some companies are required to publicly disclose their financial performance that up to now they weren't required to do so.
Yes, there could be potentially serious commercial implications for those companies. The law in this area is very complex and requires an integrated legal, accounting and tax analysis, which we here in KPMG are uniquely placed to provide to Irish business. We're more than happy to advise businesses of their obligation in this area and share the benefit of our market insights. Thanks, Andrea. Lots to consider there for Irish business. There are 3 key takeaways for me from our conversation today. First, Irish companies must ensure they are fully compliant with their beneficial ownership obligations, otherwise they will experience business delays and business disruption when they come to open bank accounts. Second, there will now be a further obligation on Irish companies that own land in the UK to register ultimate beneficial ownership details on the new UK register. And finally, many Irish unlimited liability companies that were not required to file their accounts will now be required to do so if they have a limited liability subsidiary located anywhere in the world. The rules in relation to beneficial ownership and accounts disclosure continue to become increasingly complex and are now fundamental to the basis on which businesses must operate. Given the broader international business and geopolitical environment, the direction of travel in this space is clearly towards greater transparency. Please feel free to reach out to Andrea or myself, or your usual KPMG contact, to help you navigate this increasingly intricate world. We hope you found this video useful. Thanks for watching, and see you again soon.